Good afternoon, traders, and welcome to this week's weekly market analysis, Monday the 26th of February. As always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, let's have a look at what we have on our agenda. We'll recap what's happened last week. Let's kick off with the US dollar. On Friday, last Friday, the monetary policy that was delivered really failed to give any significant impact on the US dollar. In many ways, this week it will be all up to the new Fed chair, which is Jerome Powell, and his testimonies, which are on Wednesday and Friday. And you can see that if I highlight, I'm talking about this one over here and this one over here with my mouse. Investors are specifically will be looking for what his stance is on the recent market developments, and particularly stock markets, growth and inflation, and what the views are for any rate hikes for 2018 and how they plan to play out, timing and those types of comments. So this week, US dollar was pretty much going to be dominated by those events. The other significant data is the PMI data down here, manufacturing PMI, and probably the GDP numbers, which I'm showing you right here. If we move along and have a look at the GBP, last week GBP started to trade in a fairly narrow range around the 140 level. Basically, the last week's data was overall positive, apart from the obvious Brexit risks, which everybody is well aware of. Apart from that, policymakers remain fairly hawkish, and this particular week we have manufacturing on Thursday, construction PMI, so those are the two big data events, and then we'll also have Prime Minister May speaking, and Governor Carney will also be speaking towards the end of the week. So that's pretty much what we have on the agenda for the GBP. In Europe this week is very, very light. All we have is President Draghi speaking, and that actually happens tonight, or 1 o'clock in the morning, should I say, tomorrow morning. Weak economic data last week caused the euro to extend its losses. However, the uptrend remains unbroken with plenty of support at the 122 level. And when we have a look at the charts, we'll see what's possible in terms of trades on that front. Locally, for Australia, only the one solitary piece of data, it's private capital expenditure. That happens on Thursday morning. Aussie dollar struggled against the US dollar last week. The RBA minutes revealed nothing new, and the central bank has basically said they're in no hurry to raise interest rates. Basically, it's meant Aussie dollar hasn't really had a stimulus for continued rise and stalled a little bit. At the moment, it's trading tight, in a tight range, and it's starting to develop a converging triangle, which we'll have a look at when I move to my charts. The only other comment of significance in relation to stocks, I guess, ASX seems to be our local exchange, or our local stocks seem to have recovered quicker and a little bit better than the other exchanges globally, namely S&P, the DAX, and so forth. All right, guys, if you have any questions, please feel free to type them in now. Before I do jump into my charts, there's a couple of things that I just want to highlight. I'm just going to try and take a little moment every week to if I can, if there's anything of significance which I feel is important. And this week I feel that I need to actually, before I do that, just let me finish up here, which I've just forgotten. GBP USD is going to be the currency pair which is going to be most impacted by data itself. So look out for any GBP or US data, specifically if you're trading that pair. And as always, the times that I'm showing you guys is in my local time, which is Australian Eastern Standard Daylight Savings Time. Okay, all the formalities out of the way. Let me show you something. Trade what you see, stick to your trading plan. Okay, now this is a timely reminder for myself. Just recently I got caught out about a week ago or a week and a half ago. I might have even mentioned it during a Monday class that I just felt like I really wanted to short Kiwi dollar. I did short Kiwi dollar in one of my private accounts, and it didn't really play out too well. On top of that, I moved the stop loss, and I ended up making a loss which was larger than what should have been my trading plan. On top of that, there was no real reason. There was nothing that I saw that justified a trade. So I thought it was a timely reminder for everybody to stick to the trade what you see scenario. Okay, and specifically, if your trading plan says that you're allowed to do it, well then do it. If your trading plan says that you're not allowed to do it, well then don't do it. Now I've got a chart behind that banner. Last week we spoke at length two specific charts, the Euro USD and the gold charts. I remember them, and I remember we saw trades and we saw setups, which technically is trade what you see. We put it to a vote, and the results really shocked me that almost unanimously everybody basically said no, 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 no. So let me show you the chart. Let's have a look at what's happened and let's try and play it out. Okay, for those of you who are in the class, you might remember this one. The chart was gold, a gold daily chart. And let me just refresh refresh your minds. Essentially, to the left-hand side of this chart, there was another point there. So we had this line over here, which we had previously seen react as resistance. And at the time, for whatever reasons, we had this is the exact moment in time last week. Okay, this is the exact moment in time when I did last week's class. This is exactly what we saw at that particular point in time. What is this candle formation that I'm highlighting you for you? Just can I get a bit of assistance? What is this that I'm specifically talking about? Anyone? It's an engulfing candle. Thank you, Hubert. So essentially, it was an engulfing candle setup at resistance. Now, you can go back and watch last week's video if you need to, and you'll actually see that what I'm saying is not made up. It actually happened. I put it to a vote, and we said, shall we take the trade? Basically, everybody said no. Now, this is what happened after. Okay, it's a daily chart, so I'm just going to play it out, and let's have a look at what's basically played out. As you can see, I took the trade. It hit my T1, kept on going down, and this is currently where the market is at this particular point in time. Okay, so it's moved a little bit since I've made this short video. So I've captured that was the actual movement of the market exactly as it happened. And what I wanted to highlight was that I also said that if you don't have the courage to take the engulfing candle, that you will also have the opportunity to take the inside candle the next day. All right, so when the next candle finished, on the proviso, of course, that it did remain as an inside candle. In this example, it did remain as an inside candle. So if you took the second entry, you would have basically got your entry at the break down there towards here, your stops over there. You still got to the one-to-one level quite easily on this trade. Did anybody end up taking this trade in demo at least, or anything? I just want to see show of hands. Usually gives me an idea of who's progressing through our program more successfully, or who's sort of having struggles emotionally, psychologically. Okay. A couple of you have taken it on demo. That's okay if you're still learning and you just wanted to see the progress. Now, of course, they don't always play out, but that's not the point. The point of what I'm showing you today is simply you need to make a decision if you're going to become a trader, whatever method you're going to decide to enter your trades based on whatever method that is, whether you want to do price action or you want to do the T chaser or the fish and strip or whatever method that you decide on, and you physically document that and write that in your trading rules, you must stick to your method and be true to it. You cannot cherry pick trades here and there, because the whole idea of a trading method and a strategy is that we very heavily rely on the fact of probability. Okay, we need probability to help us. We know we're not going to get every trade right, but by probability, we know that we cannot cherry pick the sample space. All right, it is very, very important. So there you go, guys. I just wanted to show that to you. The same thing happened on the Euro USD. It was a similar setup. It also played out, and we didn't take that one as well. So let's call that one a day. Let me bring my trading charts forward right now, and we shall begin a new week. All right. By the way, if some of you feel a little bit, I don't know, uncomfortable emotionally, what I've said is sort of hit a nerve, I suggest you strongly to go back and review your trading plan and make sure that you write down specifically what the entries and exits are. I tell you, I did that myself only about a week ago. That's right, I've been trading now for 15 years, and 1 week ago I had to go back to my trading plan and make some adjustments because it really bugged me, it bothered me that I took this Kiwi dollar trade for no reason whatsoever. Okay, so there you go. All right, Aussie US dollar. Let's have a look. What do we have now? If I look at my daily chart, okay, this is my daily chart right now. The first thing that I noticed is that we had sort of like a high-ish region over there. I know we've made a new high over there, but roughly an area over there. And the market has come back, and now feels like it's starting to swing inside. So what I've immediately done is dropped into a 4-hour time zone, and if I zoom out, I can show it to you. Oh, by the way, this bottom line that you're looking at, this is a daily right now. This bottom line I'm keeping on my chart. I still feel it's important. If I go back even more, you can see that I'm keeping it because it's been a level which has happened. So should this market eventually come back to here, I'm going to definitely be interested in any type of trade in that direction. Or should it break, well then I'm interested in that trade as well. So I'll keep that line there until I don't need it anymore. So just in case. I'm not using it today, but there it is. I'm on a daily chart. Zoom in, zoom in. And now I'm going to jump across to a 4-hour because I've noticed that I've got this over here on that. So I jump into a 4-hour, and this is what it looks like on a 4-hour. So the bottom line, this one, this one, this one, I've got 4 touches. I'm quite happy with that. I've got 2 significant touches over there. So naturally, if I want to try and get a trade on this particular chart, which I believe at the moment is in a little bit of no man's land, the best one is probably going to be if this market comes up to this line and I get the opportunity to trade back down, as long as I have enough room to collect my profits. Okay, so if there's not enough room, well then if you don't want to take the trade, I can understand that. I need at least to get to the 1-to-1 point before I touch this line. If there's enough room for me to get to the 1-to-1 point before I touch that, well then I will be happy with that type scenario, because usually I can move my stop for the second half of the trade and I can try and ride through the breakdown. And when we get to the US yen, I'll show you a good example that we had 2 weeks ago of one such scenario where that happened. All right, so Aussie US dollar on a 4-hour time frame, probably a trade up here is going to be the most likely to set up for us. So keep it on your hot list. Okay, if you get a break out of the triangle, that's definitely a trade as well that you can look at. That's for any breakout traders that are specifically looking at this chart. Okay, so there you have it. Aussie US dollar 4-hour time frame. Let's see if we can reach that and bounce off it. Let's move along. Let's have a look at the Euro USD. Okay, let me zoom in. Euro USD. Remember last Monday, this is the same scenario as the gold that I spoke about. We had the opportunity to take the engulfing candle this direction. This trade got to the 1-to-1 point as well. And if you did trade that one, you would technically still be in the trade and looking for further movements towards your 2-to-1 trade. Is there anybody who is still in this trade, or did anybody take this trade? Euro USD short. Anyone? Just let me know. Okay. Yeah, no one. Which makes sense because I remember when we talked about it last week, nobody wanted to take it. All right. So what do we do now? Let's have a look. In my opening, I said that Euro USD, the uptrend is still intact. Okay, we haven't broken this down, so you could argue that perhaps we may still do this. This has gone a little bit higher than this. It's barely hanging on. I see in here there was an inside candle. Okay. However, today's candle, the current candle has, or this bottom has gone lower than that. So that automatically cancels the trade out. So I don't have, I would have had a pending order over here to go in that direction. But because we've gone lower than the bottom, that is no longer in play. So for this one, what I really feel is I get the feeling that we are going to spend a little bit of time in here. So I'm going to box it out. And until I break out of this region, I'm not interested in trades, in any other trades. If I want to trade the perimeters like this, then I want to get good solid setups on, has to be virtually on these levels. If I get the setups on those levels, well then I will consider it. At the moment we don't have it, so what you can look for, if this current candle drops down into this level, we can look for the price action to go up there. Okay, that's, I would consider that. And also if we're up here, I would consider this. All right. Other than that, not really looking at it. Questions being asked. Alan's asking me, am I sure it's gone lower? It has on this particular chart. My low on this candle is 122.798 and the low on this candle is 122.793. It's gone down by half a pip. Okay, so it's not a lot, but it has broken it down. Now, if that's acceptable for you, then if your trading rule says it's okay as long as it's gone lower, well then if it's gone within that tolerance that I've just stated, well then you can put in a pending order to break there and trade it that way. Give me a sec, let me double check. I'm 100% sure that on my chart here, it has gone lower. 100% sure. Okay. The low here, I'll show you where to look. Concentrate on the number that appears in here. Okay. You ready? Look at that number. 122.798. If I slide to the candle before it, 793. That's 100% lower. Okay. So we have definitely broken the low. Question is, Hubert's telling me I'm only looking at the bid price. I understand that, but the chart is drawn by the bid price, which is the sell price. Okay, so there's no actual way of me knowing if the buy price, well, actually, I can tell that the buy price has not broken down, but that's okay. All right, so that's important to understand that. Okay, let's move on. Let's look at the US yen. Okay, US yen. Let me show you the picture from a distance. Remember, we were looking at this. We said we felt like the market was kind of trading in that area for a little bit. Let me zoom in because I think 2 weeks ago we had an engulfing candle situation. We had this one. This is body engulfing, okay? And then we also had a second effort right over here. And I said, look, if you don't feel there's enough room for you to hit your target, that's okay. But if you happen to take that kind of trade, when you're heading into like what's been a support or a resistance, sometimes if as long as you can get your T1 out of it, okay, and then if you can hang on, usually when it breaks quite heavily through it, and this is what's happened on this particular trade. So, for example, if you had taken this trade, which entered, that was the entry to it. Let me just mark the entry point. That was the entry. There's the stop. T1 was just a little bit below, so possibly you didn't take it, but if you did, usually once you get through that support, it can easily rush through, and then you can try and stay in that trade for like a T3, a 3-to-1 type scenario. Okay, so very, very important to understand that. That case would be applicable to the Aussie US dollar in that 4-hour example that I showed you. Say, for example, back here, if we were to get a setup there and T1 got you to here, because it's converging, then you might as well stay for the break. You're already in the trade and you may be able to benefit like a 3-to-1 or 4-to-1 and result on your trade. All right, US yen. Definitely we're in downtrend now. Okay. This would have been a body engulfing, but we've missed that. So I kind of have to wait for pullbacks, get in the trade, and then continue in this direction. So at the moment, there's nothing I can do on this particular chart, so I just have to leave it and move on with this particular one. Okay, let's have a look at gold. Gold we already talked about at the start of the class. So what do we do now? It looks like it's starting to converge now. You can see it. I can feel it. I can feel it looking like it's starting to do this. So if I wanted to execute a trade on this particular one, okay, if I dropped into a 4-hour time frame, let's see what it looks like. I just have to adjust these lines a little bit for the 4-hour. Okay, so if I wanted to trade it off a 4-hour chart, then I would have to just adjust my lines. Looking similar to the Aussie. So look for trades in these areas as such. Alternatively, this one you could possibly even do it off a daily time frame. If I zoom in, it looks okay as well to try and execute that trade off these two top lines. That's probably the best trade that I have for you on gold at the moment. It seems to be converging, compression. So let's see if we can possibly find a trade in there. Unfortunately, there was already one here that I can see. This was an inside but technically the second touch is a little bit ambitious. So technically the first trade will be over here if we get one to come over here, because this line only confirms that it locks in after we've moved away from it. So that's okay. I don't mind that. Okay, does everybody understand that? Yep. Fantastic. Okay, so with this particular one, let's keep those lines in place and let's see if we can trigger something based off that. Let's move along. Let's have a look at the GBP USD. It seems to be the pattern of last week's activity that the market is narrowing in on itself. Let me just zoom out a little bit more. I just want to see it. So when I look from a distance, I could feel like we're in uptrend, and now all of a sudden we're starting to get a little bit tight. So let's play to what we see. Let me go into a 4-hour chart. I just want to see what it looks like. Well, this one, unfortunately for this one, it's too narrow. I don't think there's going to be enough space. It's only about 70 pips across the channel. Probably with this trade, this would only be applicable to breakout traders. What you're going to have to look for here is you're going to have to look for either a big breaking candle and then take your trade, or a breaking candle in the other direction and then take your trade. We're already too far into the narrow section of the chart, so I don't see any other possibility for this particular one. Okay, if you don't like breakout trading, just walk away from it, just watch it and just see what happens. All right, but I will leave these lines on my chart because they will help me remember what I was looking at, and that also will highlight for me the level of the breakout as well. Now notice it's all happening around that. Look at the number that we're on. This is like the decade number, the 140, and it's like we're trading around it. We're trading around the 140, and eventually we're going to either shoot off or shoot off. I don't know which one, but until I move away, I'm not willing to take anything. There's nothing else showing other than that breakout. So if you're a breakout trader, I'm not a breakout trader. I used to be, but I haven't done breakout trading now for a little while. Psychologically, I don't think I'm suited for it. So, and the whole idea about trading is trying to find the strategy that suits your psychological risk profile. And for me, breakout trading doesn't sit well for me. Although I have had mixed success with it, I just prefer to just sit it out, and I much rather trade price action reversals of key points and price action trend continuation of key points. Okay, so there you have it. All right, that's GBP USD. Let's move it along. US CAD. Oh, let me zoom out a bit. Okay, I'll keep that blue line down the bottom. You could see the reasons why. I've got nothing on this one. Like, I'm trying to find the reason to sell this. This is like a 3-candle reversal pattern. But a reversal pattern in the incorrect zone basically means nothing. Okay, so I can't do nothing about that. If anything, it looks like perhaps the trend is about to change and start to move upwards, but I don't think so yet. I want to wait a little bit longer. So US CAD, let's just leave this one alone. We're doing nothing US CAD. Let's move along and look at oil, WTI. Okay. I remember last week when we looked at this chart, we saw an engulfing candle over here, and I said we don't really know if this is the beginning of a downtrend, because if you're in a downtrend, you pull up and then you shoot off in this direction, and this carries too much risk because it's not really confirmed. What I like to see before I start to try my trend trade is first, yes, the moving averages did cross over, okay, But what I would have liked to seen is a break of this low and then pull back, and then this time, yes, attempt to take the trade on that one, not on the first one. Okay, so just make that note to your mind just to see if that's something that you'd like to try. And the reason is because often this does happen. It's not, in the end, it's not quite the point. It's going back up, and now like I'm still bound by these two areas there, and we're in the middle, and I don't really know which way this thing's going to go or not. The best bet trade that I can see right now is if the market takes us back to this level up here at, if it takes us back up to that level over there, then over here I would be happy to attempt a double top type trade. Okay, now if the market took us down to here, and I was to draw a line across here, as such, if I tried to take this trade like that, this would not be a double top. Okay, sorry, this would not be a double bottom, because when you look to the left, all this is below, so it's not actually a bottom. Okay, so a lot of people get confused about double tops and double bottoms. So for it to be a proper double top or double bottom, notice that when I zoom out here, see, look at this. Oops. This all empty, nothing. So it's actually, it's an actual top, okay? And then this would be the second attempt to it, okay? Whereas if you went down here and then the market went to there and went to there, is that a bottom? No, it is not, because I can see there's other bottoms. This is a bottom, even this over here, okay? Can everybody distinguish? Do you understand the difference of what I've just explained? I get, this is a very common question that I get emailed. Can I trade this double bottom? And particularly it happens when you zoom in time frames, okay? And it looks like it, but it's not really, all right? So please take note of what I've just explained. Okay. So this week then, after all that, WTI, I can't do nothing. All right, so I'm going to get rid of this bottom line. I'll keep the top one. If I get to the top here, let's look for the double top and try and short. ASX. I mentioned at the start of today's class, ASX is one that's recovered quickest. And what I meant by that is if you look from the fall point, ASX was traded at about 6,000 and say 90 or something. It made its plunge down, but it's recovered back quite well. It's recovered almost 100% back, and compare that to other exchanges that still are only at about maybe 60 to 70% recovery. So that's healthy for our economy, at least our stocks. Unfortunately, looking at this, there's still nothing that I can see. I was kind of keen to try and get a short, and then I was very firmly reminded by my trading plan about what happened to my account last week. So I declined the hunch. All right. So what I would be looking for, the type of trade that I was trying to find is I was trying to get a Fibonacci level in here, but I went past the 61.8 level, so there was nothing there. So this week ASX, nothing there, but just note that it has recovered significantly compared to other exchanges. Last but not least, let's have a look at our Kiwi. I was just a little bit too early on my trade. I think I shorted it from about here. And I should have placed a stop somewhere over here, but I hung on and ended up taking myself out over here for like a loss which was 3 times as much as what I should have taken on the trade. Okay, so lesson, not important. Sorry, it is important. But at least I had my second tier of risk management on my account, which basically did what I needed it to do. It overwrote my original movements. And what I usually do is on a VPS, I run account management, which is balance based, and it stops out all my trades regardless of what I put in on my MT4. It overrides everything, and it kicked in and basically protected my account, but not my ego. Okay, so all right, so what do we got now? Again, another market which is tightening, and if anything, it looks, I can't really say if we're in an uptrend or not still. If I had to guess, I would say yes, I'm still in an uptrend. These were very, very similar. So on that basis, I could argue that perhaps here at the moment there is an inside candle situation, which would mean that tomorrow, okay, if it remained as such, there will be a fractal over here. And at the break of that candle tomorrow, we could take a trade in that direction. Let's assume that the chart finished exactly as it is right now, and that was the case. Let me play out what my thinking is behind this. So if that was the case, then let's say that I felt there was a resistance level up here, which it looks like there is, okay? So if my entry into the market was to be at this level here, my stop would have to be here. I can see visually already that that stop distance and this target distance, that there's enough room to reach my one-to-one before I hit that resistance. So in this particular case, if I was happy to take the trade, well then I feel that I have enough room. And then usually in my trading plan rules, when I encompass such situations, what I do is, let's say the entry was there, let's say the trade got to about here, that's the one-to-one point. At that point, I would grab my stop, move it to break even, okay? Which basically means what? That at the very least, there is zero loss on the trade, okay? And if I had taken some profit on that trade as well, then I can hang tight and attempt the break. Usually if you do get a break, especially when it's been a resistance points already twice, we've already had a double top kind of situation here, here, and kind of here as well. So I would be willing to, to bet that there's many people that would have their stops over here. All the people who are sellers, their stops will be all piling up back here. So if I hung tight through my trade, as we get there and we start to trigger these stops, it acts like a domino effect. They all fall over and my trade rushes right through. And it's easily now, for the second half of the trade, I could easily now try and attempt to get 3-1 on the trade. Okay, does that make sense to everybody? Do we understand? So if the current candle formation finished exactly as it is today, there is enough room to attempt the trade because the one-to-one level is below the resistance. And then once I've removed the risk off the table, then I could attempt to go through that rush of stops and hit my next level on the trade. Somebody's saying, is it a double top? Well, the double top's already happened. And if you look, even though over here there's a top that was higher, okay, and this one, what you got to remember that matches up. So it's not so much a double top, but it's essentially just a key level. But in any case, I would consider still this a top because this was a very long time ago. Okay, this is July 2017. So that's a long time ago, and there's a lot of empty space here before we got to that level again. Okay, so that one, yes, I would be happy to call it a double top. Okay, all right. So bottom line is, if we feel that we are still in trend tomorrow if we have an inside candle, we can attempt that trade up. It all depends on what today's candle will finish up looking like. Okay. Alternatively, we have another opportunity. We can sit that one out and try and trade it back down if we get the setup again. All right. So there you have it. Okay, let me go back and recap. Any questions, please type them in. Here we go. Aussie US. On a 4-hour chart, we're going to attempt to see what happens at that level and look for this type of trade. Euro USD, we're in congestion and we're only looking at trades to go as such, or wait till we get out of the area before we start to trade it again. US yen, we said nothing. Gold, tight range again. 4-hour chart opportunities, or you can do it off a daily with this one. There's enough room for both. GBP, we're on a 4-hour chart. This one is too narrow for us already, so this one is only breakouts. Okay. US CAD, we said we will do nothing. WTI, we're going to wait if we can get that double top. ASX 200 was just a nothing as well. Finally, Kiwi, we could possibly attempt a trend continuation type trade tomorrow, or we can try and shore off resistance as we get it. As we approach that resistance line. Okay, question being asked by Tim. How do I set up T1, T2? Great question. What I suggest, Tim, is go and look at the 3 modules, or look at the modules on price action. There's 3 of them. It'll take you a while. It's about an hour video, and I explain it in very clear detail, but let me do it super quickly right now in 40 seconds, all right? Let's pretend, let me zoom in on this chart. Let's pretend that I had decided that I was going to buy right here, okay? And I'm buying just because I've just chosen that point. Now, price action tells me, because I'm going in this direction, that I'm going to go back to the last 2 candles which provided the price action pattern, which is these 2, and I will put my stop below the lowest point of those 2 candles. And usually, depending if I'm on a if on a daily candle, I might go about 5 pips below. Okay, I usually go between 5 and 8, and that's a personal decision. So the lowest point is here. So that's the lowest point. So I'll go a little bit below that, say 5 pips. That's where I'll put my stop. I'll just put an S so that you know where it is. Let's say my entry was there. Now this distance, I measure it. Okay, I literally measure it. So let me just measure this one. This distance here is, let's just call it 60 pips. So this distance here is 60 pips. So therefore T1 will be equal to 60. This is the point which I call the 1-to-1 point. In other words, I'm risking $1 to make $1, or I'm risking $100 to make $100. I'm risking 60 pips to make 60 pips. Does that make sense to everybody? T2 becomes twice that, which is 120. Okay, but I can make T2 whatever, but the way that I name it, I'll say T2, T3, T4. Okay, so T3 would be 180. Okay, which is basically I'm trying to make 3 times as much as my risk. So when I say here T1, if I measure this, T1 looks to me visually that it's about that distance there, which is the 60 pips. You're up 60 pips, plus 60 pips. This one here is minus 60 pips. Okay, and then T2 will be up there somewhere, which is beyond that resistance, and that's the 120. Okay, go back and have a look at those modules, and you'll understand that very, very clearly. What program do I use? I don't understand that question. This one here, this is MT4. Is that what you mean? The trading software? if you want to find where those programs, those classes on price action are, just send us an email. The email that you got today inviting you to this class, just hit reply, ask the question there. Okay, it'll eventually get to me and I'll point you into the right direction. Okay, guys, any other questions before we wrap it up for today? It's been a good session. I urge everybody, I just did my trading plan again a week ago. This is probably, I don't know how many times I've done my trading plan, but it's got to be at least about 30, 40, 50 times, I don't know, over the last 15 years. If I can do it, I feel that you may want to review yours as well. What skin am I using? Oh, okay, this is just the templates that I like. It's just it's that gray because there's a window kind of behind me, and I get a lot of reflection. So this color basically makes it not reflect much for me. But when I do the daily call, I use a different one because it just looks nicer on video. So my chart looks like that. So it should catch up to you in a moment. There it is. But it's just all MT4 and just customize the setup how you like it. Okay. If you need help on that, I can point you in the right direction as well. Any final questions, guys? If there isn't, we will call it a day. Watch the daily call, guys. Incidentally, while I was away in Perth last week, I got stopped out on CAD Yen. That's been updated, and I've triggered a trade this morning. What was the trade that I triggered this morning? CAD Swiss, I think it is. CAD Swiss from memory. Okay, so there is a trade on there right now. If you go have a look, you'll see it up there already. Other than that, look, guys, let's call it a day. Hope you all have a fantastic trading week. Watch a daily call every morning. If you have any questions, email us. CAD Yen, yes. Quick question before I wrap up. CAD Yen, yeah, I got stopped out CAD Yen. Where is it? Let me look at a CAD Yen chart and I'll tell you, I'll draw it on this. Give me 1 second. Oh, let me find it the easier way. Here's the trade. I don't know how well you can see. There was my entry. You can see the mark on my chart, and there's me getting stopped out here. Okay, and the reason for the trade, I believe, was there was a lot of divergence on this particular chart, and it was at a Fibonacci extension. It was a daily call trade. Incidentally, the Monday class trades that I took on my account last week, I didn't include them in the statistics because you guys said no, so they're not included. My numbers would have been better if I'd included them, but I have not. I've only included trades from the daily call. I'm not including trades from the weekly Monday class. Okay, but that's the trade there, CAD Yen. I got stopped out on that, and it has been updated, reflecting that's what happened. All right. Okay, guys. That's it. Let's call it a day. Have a great trading week. If you have questions, send them to us. More than happy to help you. Watch the daily call. Otherwise, I will speak to you next week on Monday. Bye for now.